I'm Piyush Jain and you're watching Market Guru. Joining us on the show today is Nischal Maheshwari, the CEO of Institutional Equities and Advisory Centrum Broking. Nischal, welcome to the show. Now, it's a very interesting event again which you're conducting at present. A lot of ground feedback, again feet on the ground, and also a couple of sectors again which are in the fray. So let's talk about them one by one, and let's first talk about cement. What is it, what you're hearing from the cement sort of intelligence, again, dealers and all sort of trends at present? Because from the cement sort of intelligence, again, dealers and all sort of trends at present, because of late what I've been hearing is that there has been some cement cuts in the southern region, Telangana, Andhra. Cement cuts have happened in Maharashtra, Delhi cement cuts have happened. The central, again, demand actually is looking very strong. But how is it coming to you, and what do you make out of the trends?
Piyush, I think it is as yet early basically for me to comment on the whole cement sector, because the event has just started. I happen to meet a few dealers at the moment, but through the day I think we will be able to get much more dough for you. Yes, North India seems to be doing in a good stead, but I think that has been historically, because after the monsoon season, you will always have a very strong season, especially when you are going through the winters. So North is doing pretty well. Yes, you are right. I think South is a bit weak, but Central India again is pretty strong on the cement side.
Right, and from that perspective, what do you make out of the sort of current dip in the raw material prices? Whatever the price fall has happened, like for example, again, South, as we were just talking about, is this cement price fall primarily following up the raw material price decline? And if that is so, is it also again reflecting that demand is not strong? So everybody again just wants to maintain margins, they just want to ensure that the volumes are coming for them. Like, how's the trend looking to you?
So South has been particularly weak basically, and I think obviously there has been raw material prices, and cement industry per se has been beneficiary because of two reasons. One is because the coke prices have come off, and the second is the transportation cost. So both of them basically is going to benefit the cement sector, and I think the South companies, given that the volumes are not strong, are passing on. But I think North and Central, where the demand is strong, basically I think the same kind of pass on may not happen. So if one has to actually look at it, I think focus on the North and the Central India based cement companies.
Right, so one tactical question to you from your own sort of perspective here. Is this time again, how one should position themselves? Is it time to again position yourself only in the Central India exposure like Birla Corp, or again Ultratech again, which has a good volume market share? Again, it's a pan India, but still ACC, or you think the demand actually is sooner or later again the pricing is going to again also improve in Western India, so maybe Ambuja, maybe Sangli, maybe JK Lakshmi? Like, where we should position? Again, is a regional sort of concentration, or pan India, or if there is any sort of particular bias?
So I think North and Central India based, as I'm highlighting, I think those are the companies one should follow and focus on. I think in the large caps you should look at two companies, Dalmia Bharat, which is again North and East focused. Then the other one is Shri Cement, again North and East focused, and Central India also now they are starting up. And then some North-based companies like JK Lakshmi, JK Cement, Heidelberg. I think these are the companies basically which are big in the Central and North India. These are the companies one should be looking at. Yes, Western India I believe is going to recover the next, but there I think Ambuja or ACC can be looked at. And obviously Ultratech continues to be the bellwether friend basically, because given that they are present across the country.
We have a couple of names. Again, let me try this. If I want to ask you your top two picks in the cement space, what would be those stocks?
Shri and Dalmia.
Right. And is there any target at present on the two stocks?
Yes, we would be having, but I don't remember it offhand basically what is the target prices.
Fair point. It's the feet on the street, so I think it's more important right now to ask you what are the feeds telling you. Cement we have talked about. Let's talk about one very interesting sector, very diverse sector, because there are so many moving parts. You can talk about tires, you can talk about pistons, engines, auto ancillaries. You can talk about the commercial vehicles, the LCVs. You can talk about passenger vehicles. So there is so much to talk. So let me go one by one again. What is the sort of thing you are hearing about the tire space at present? How's the demand looking there?
So demand across all the auto sector is weak, whether it is two-wheelers, four-wheelers, or the CVs. I think all across it is weak, except for tractors. I think tractor continues to show good volume growth, but I think all the three of them basically has been showing weak growth. Now, as far as tires are concerned, I think OEM is a big sector, and I think it should lead to a slower growth for tires also. Because replacement is not a big market as far as tires is concerned. So I think it will have pressure basically as far as tires are also concerned.
Right. Staying on the tires, what's your understanding, Nischal, between the PVs and CVs? Because we were seeing a slowdown in the CVs again. The recent numbers are reflecting that. Now, we can attribute that again to the NBFC weakness or liquidity conditions or higher interest rates. But when you actually keep these conditions apart, do you see core demand actually that is slowing down, or this is a temporary sort of phenomenon because of all the financial mayhem actually we saw in the context of liquidity and all the sort of interest rate scenario?
So if you look at it, I think on the macro front, things seems to be improving. You have got falling oil prices. There is a very clear, after yesterday's RBI policy, I think there is a clear rate reversal cycle which has to come in. Rupee is now behaving properly, so I think less than or around for 70 rupees. So I think all these factors seem to be favoring India as far as macros is concerned. Now let's come to the local side, and I think this big problem basically which has happened in NBFC space. And if you remember in the last 6 to 9 months, I think the biggest funding which was happening, given that the PSUs were on a slowdown course due to their capital problems, I think the funding was largely being done by the NBFCs. So consumption, housing, there I believe there is going to be a slowdown which we started seeing in the initial first or 1 or 2 months. But I think it's going to take some time to come back. And that is the thing basically which I am worried about, and that's why we set up this whole conference. So after this busy season or the festival season, we were getting mixed picture basically from the market. So we thought it is good basically that the funds also get a first-hand feel of what's really happening on the street.
Right. And before I go and actually ask you more about the auto sector here, broadly in the context of your effort here in terms of conference feet on street, what's the major effort again behind bringing the various sort of moving parts from the auto sector, again the dealers and everybody? What is the intended outcome from your side?
So I think there has been a huge response as far as autos is concerned, given the auto numbers are weak. Similarly, steel, cement, people are really worried that the core demand is faltering again, and the consumption demand. Both these sides I think people are really worried about, and that's where we wanted people to come across and start meeting these. So even there is a white good dealer here basically, and he also continues to say that there is weakness in demand. So I think urban demand seems to be definitely easing off. Now we have to see basically whether rural demand is also started faltering or not. But urban demand, I think definitely it is easing off.
Right, very interesting effort indeed, and I think the conference is going to be very beneficial, and BTVI is going to bring all of that again action here. But let's go back to auto. As we were just talking about tires, we have talked about. What's the sense again in the context of the demand around the two-wheelers? Again, we'll talk about the passenger vehicle later, but two-wheelers in particular, what is the sense you're getting on that?
So two-wheeler, I think there is a slowdown. Rural side, I don't see that slowdown, given that the rural side still the funding was not much. But I think on the urban side, we are clearly seeing a slowdown as far as two-wheelers are concerned. Company specific also, Bajaj and all, I think the slowdown is there. In case of Hero, I think the slowdown is a bit lesser, given that their rural presence is very high. So you clearly see basically that there is a slowdown as far as two-wheelers are concerned.
Right, and in the context of auto ancillaries, how is the trend looking like? Because again, there will be a lot of auto ancillaries who would be actually supplying to the two-wheelers, four-wheelers, commercial vehicles. Again, how's the trend looking like that?
So there I think it's not percolated down to the auto ancillary as yet. I think most of these companies still do not believe that this is going to last for a long period of time, and that's why they should be starting cutting down their order to the auto ancillaries. So I think if this continues for another quarter, I think then you will start seeing the impact coming on the auto ancillaries also.
Right, so which means you're saying that at present they have not cut any sort of production outlook, they are still again going with a similar sort of order book visibility from the OEMs, and keeping that, are you also getting the fact that OEMs actually are not cutting down at present any sort of orders to these companies?
At the moment, no. I think they would wait for another 2-3 months to really see that there is a much slower demand than what they had anticipated before they start cutting the ordering.
Right, so near-term fluctuations again is what actually is the assumption right now. Within the ancillaries, any particular area where actually you are hearing about some very strong demand or any sort of major uptick in terms of demand outlook?
So auto ancillaries, not much. Basically, we have very few people coming in from auto ancillaries, because auto ancillaries really, there is hardly any dealers. These are largely OEM guys basically which you got in the conference.
So fair point again, it's also a very wide space here, but let's go to the passenger vehicles again. What's the understanding you're getting from there?
Again the same, I told you the whole auto except for tractors, there is a very clear slowdown which we are seeing across all parts of the...
Seeing that tractors are looking much better?
Tractors are in a better shape basically. Once again I was telling you that there's a clear slowdown as far as the urban demand is concerned. Rural seems to be still in a good shape given the elections, the promises and the money which is being doled out to the rural side. I think that should continue to be strong, and that's why you're seeing that the FMCG is not slowing down, which has been driven by the rural demand. Tractors is not slowing down. Two-wheelers, motorcycles specifically which are being sold in the rural side, that is also doing okay. So I don't see as yet slowdown in the rural side, but I think urban demand is definitely off.
Nischal, we talked about cement, we talked about auto here. What are the other sectors again you're hearing about in the conference?
So we have steel guys coming in basically both longs and flats, and I think they are very surprised that the demand prices have fallen very strongly, especially on the flat side, and the demand is also pretty weak. As far as long guys are saying, basically they are still okay given that the demand in the infrastructure sector, largely driven by the government, seems to be okay. Then we have got the whole big set of people coming from the financial space, the MFIs, the NBFC guys, the ARC guys. So I think that whole space still continues to be in a turmoil. I think there are challenges out there, but they seem to be of the worst place basically as far as the whole financial space is concerned.
Well, financial space indeed is very interesting again after the RBI policy here. So they could be actually looking at a sort of renewed optimism on the bonds and also again fall in the bond yields. But seeing on that, NBFC, let's explore more on that here because that has been in the pick of the action in the last almost 2 months. NBFCs, what are you hearing on that? Is there any sort of potential market share shift? Have they pulled back again? Because the data was telling us some credit growth has been pulled back again primarily because of the sort of liquidity concerns. But broadly, how's the business demand? How's it looking from their side?
So I don't see that there is a issue on the demand side as far as the NBFCs are concerned. The issue remains to be on the liability side. So they do not have enough money, basically enough liquidity to actually take care of this demand, and that's why I believe they are going to start losing a bit of market share, and that market share should go back to the banks.
Right, and when you're hearing about the intelligence on the sort of financial side, is there any particular sort of subsector? Because even when we talk about NBFCs or the lending side here, especially in NBFCs again, you talk about the consumer durable lending, you talk about the CV lending, you talk about the retail lending. So there are some specialized stocks again in those parts of the market. Any particular sort of niche intelligence which you're able to hear?
So I think as far as MFIs are concerned, they seem to be okay. Housing seems to be in a dull space. Consumers, they have taken the foot off the pedal. Then again, CV, definitely foot off the pedal. Basically, demand is weak, and the credit also availability is also weak. So I think both the sides. So I think more or less these are the few spaces basically which most of these guys are doing, and consumer definitely they are not pushing it much.
Right, again, so some important intelligence again coming from Nischal here, and watch out for the trends. Again, if these trends are going to continue for some more time, it's obviously again that is also going to go into earnings there. So again, some good trends again coming from the conference. But also Nischal, let's talk about ARCs again. Interesting space. We don't have again much options here. Again, there are a handful of names again which are active from the listed sort of point of view. But still, what is the buzzing in that space? What you are hearing from them?
So ARCs seem to be pretty good. I think we have got two ARCs coming. One is of Indiabulls ARC, and the second one is Edelweiss, which is a much established. So, and Indiabulls is just getting established. Both of them seem to be in a pretty good spot. They see that the business outlook for the next 3 to 5 years are in a very good spot. And again, for next 3 to 5 years, they believe that the outlook continues to remain well. Even at a higher requirement for capital, they are confident that they will be able to generate 18 to 20% kind of an ROE. So I think given what is the state of the economy, I think these are the guys basically which will do well.
Right, and respect to recent recovery trends again, perhaps is that something which is creating enthusiasm, and are you hearing that they are getting more sort of participation noises, because there was a time when again the players were coming but they were not getting the right value on the table, and then now actually you started seeing some good sort of value creation on the table. So are you also hearing that there is more investment coming into the sector and perhaps more deals? Is that something looking very exciting, very exuberant from them?
Yeah, they are excited about the business. What we thought basically was only a short-term business now seem to be having a pretty long life, given that the NCLT which is there, and I don't think so this NPA problem is getting sorted in the next anytime soon.
Right, so that was NBFC ARCs. Any other sort of intelligence coming from the financial space from the maybe the PSU banks, private banks, or even if not them, but broadly from that point of view, again, if you're able to correlate all the financial data?
No, I think we don't have any representations from the bank side. We have some DSAs coming in basically, and they are very clearly stating that all kind of demand is basically slowed down.
Right, the demand has slowed down again, so that basically is also a reflection of the credit growth. So that's something interesting here. So from the financial side, let's also talk about steel again, which I just mentioned on a flat and long basis here. Now, if I look at the Asian side again, the Chinese steel prices, those have corrected. But again, the recent sort of truce again, which the market was rejoicing for 1 or 2 days, but still the broader trend again has again gone back into the same year, is that there has been a correction from the top on the steel price, there has been a correction from the top on across for most of the raw materials. What's the sense you are getting in terms of imported sort of steel? Is there any concerns which, because you talked about the pricing and the demand, but any word around how actually are the imports doing at present?
Imports continue to be there basically, but I think the landed cost is now slightly the landed cost is much lower than the current prices. So I think it is not impacting the prices that way. But I think the recently what we've seen, the demand going down, I think that is impacting the prices much more.
Right, and Nischal, what's the reason for the demand to go down? Is it coming from the construction space, or like why this sort of demand is going down? Because if I look at the spreads, the Indian spreads have generally held it on. Is there was some moderation, but that is also a reflection of the global market. But why is the demand softening?
So I told you earlier, basically the demand in flats is slowing, and flats generally gets consumed by the cars and all. So it is the consumption sector which is slowing down, and that's why you're seeing this slowdown. But again, I think it's more to do with the prices world over is falling, and that's why you're seeing this kind of a demand slowdown, availability of steel much more, which is putting pressure on the whole sector. Right,
so that's the word on steel. Early days, because again you're going to interact more and more again with your guest in the conference, and we'll again take more intelligence later. But in the context of, let's take a backseat and now actually talk about the markets also here. From market point of view at present, what are you liking?
So I think I would want to play safe in this time, in this kind of uncertainty for the next 3, 4, 5 months. So I would be based largely in consumption, export-oriented sectors, and banking. I think these are the places basically I would want to typically hide in this kind of a market. I don't think so there is any particular trend which is emerging strongly, and I think the best way is at the moment just to be quiet and put your money basically where you will get 15-20% kind of a return in safe stocks.
Right. So when you're talking about the banks, is it more about the corporate private banks? Because slowly we are seeing that becoming a crowded favorite now again, corporate private banks. Is that something you're also liking?
Yeah, it makes sense basically to own them at this moment. But I think corporate private sector old versions is the older private sector banks I like more rather than actually the newer ones. The likes of Federal Bank, DCB and all, I think they seem to be in a good spot. They are growing pretty well. They are available pretty cheap. Federal Bank, case in point, is available around 1.2 with a 13 to 14% kind of an ROE.
Right, 13 to 14% ROE is also good. Again, again they will again with their efforts again we like to aim for 18-19%, but that's something again which is looking good. So that's Federal Bank again which Nischal is liking at present. But from the banking side, what about the other sectors you talked about? Any topics there which you want to highlight?
No, I think we like ICICI and Axis in that sequence.
Right, and about the other sectors, what about the IT? Any particular liking there? Like, because on IT also what I want to ask you is that currency there has been appreciation, yes, but the demand outlook actually was improving in US. Now what we have been seeing of late again in the context of the US markets, what's the sort of view you're getting on the IT? Good correction, mid-cap IT stocks, large-cap IT also again has been a good performer this year. What's the larger view around there?
So I think IT continues to remain strong, especially on both on the mid-cap and the large-cap. Yes, rupee is favoring it, but I think the more important thing is that it has got a very, very strong backing of a strong demand in the US. So I'm betting on that demand, basically that demand coming back strongly again, and that's why I believe that IT stocks and valuations also in your favor, like a Tech Mahindra, which is our topic, I think is available 12 times FY20 numbers.
Just for the clarity, what's the topic, Nischal?
So IT we have got Tech Mahindra in the large cap.
Okay, Tech Mahindra is a topic in the IT pack here, but then also you talked about the export sector, and that should be something very interesting. What do you like there?
Export, I think IT only is the sector basically which we are doing. I don't see pharma coming back very strongly.
You don't like textiles or the other sort of export companies?
No.
Any exposure, or at present you don't want to take any sort of volatility risk?
No. I don't think so. Those are good, strong businesses.
And no liking for the pharma also, because again for the last many months there has been some sort of very strong liking by the market in that sector.
I think it is good to avoid pharma at the moment.
Right, again, so we'll leave at that, and all the wishes for you for Feet on the Street conference, and we'll keep in touch and get more intelligence from you later on. But Nischal, thanks a lot for coming on Market Guru and sharing your insights and intelligence on the markets and the sectors. And with that, it's a wrap on this edition of Market Guru. Thank you so much for watching us.